Basically, I'd say that 80% of the deals that we bought were direct to seller.
Hmm.
So we were making phone calls, calling owners directly, and it was small apartment buildings. 4 to 40 units was our target.
Yeah.
So we had a pretty defined buy box. And when we're making the calls, the goal, of course, is to say, hey, Mr. Seller, when you eventually decide to sell, whether that's today or in 6 months or in 4 years or whatever,
Hmm.
hopefully we'll be your first call. We can make the sale process for you really easy. No commissions. You don't have to show it. You don't have to upset your tenants, et cetera, et cetera.
Yeah.
We'll just come in and make it really easy for you. So the goal is to buy for 5 to 10% below market and then sell for 5 to 10% above what we had paid.
Hmm.
And so we could build ourselves in as long as we had about a 15% gross margin, that's where we knew that we could make money.
Okay.
So the numbers were pretty simple. And as long as you, again, didn't overpay for the property, one
Hmm.
of the best lessons that I learned from my team member and my mentor there that, he said, it's really easy to overpay for real estate,
Yeah.
right? Like you can go out and you can buy millions of dollars of real estate tomorrow and
Yeah.
just overpay for everything. That's really easy. All of the money is in the buy, right? So our model was such that, and because we're buying cash flowing assets, again, we would buy it with the worst case scenario is we end up having to hold this thing. It actually cash flows, or at least it breaks even. And so
Yeah.
that was the goal is whatever we were buying, even if we had to use some private short-term capital or some sort of bridge debt or things like that, as long as we were buying it and we were comfortable carrying it at a close to break even position,
Mhm.
then we were generally okay to say, okay, we're highly confident we're going to at least get our money back and probably make a profit.
Yeah.
So it was a really smart business model.
Weren't a lot of times, especially new people, I see they're looking for this big home run on their first deal. They want to sell for 80% above, or they want to get these huge margins. And you guys just knew exactly where you needed to be, 10, 15% below market, sell for 10 or 15 above. And you knew exactly what assets were going to work for that. And it's those base hits, right? That just
Yeah.
consistently pay off
Yeah.
that
And
are
there was
really
there
where you
was a
need.
few there's a couple home runs where we made 2 to 400,000, right?
Sure. Yeah.
And so again, I think the home runs greatly outweighed the, the the stinkers that just didn't do much for us, right?
You always underwrite it as something, if you worst case scenario, you have to hold it. Is it going to be okay? And that's exactly what you guys did.